Nigeria recorded 2.2 trillion naira trade surplus in first half of 2023, says National Bureau of Statistics. Central Bank of Nigeria, Nigerian Communications Commission resolved 150 billion naira USSD debt impasse. Asia markets fall as Japan economy grows slower than expected. Hong Kong cancels Friday trading. And on Business Express today, our searchlight is on how Nigeria and India can leverage on their potentials to create reliable economy. The program is Business Express, reaching you from Abuja, Nigeria's capital. I am Musa Abubakar. Now let's begin by telling you that the National Bureau of Statistics says Nigeria recorded a 2.22 trillion naira trade surplus between January and June of 2023. The Bureau stated this in its recent foreign trade report for the second quarter of 2023. In the first half of the year, the Bureau says Nigeria's exports total 13.5 trillion naira and total imports stood at 11.3 trillion naira, which gives a trade surplus of 2.22 trillion naira. A trade surplus is an economic indicator of a positive trade balance in which the exports of a nation outweigh its imports. On foreign trade for the first quarter of 2023, the MBS said total exports were 6.49 trillion naira and imports value was 5.56 trillion naira. The nation's total trade was 12.05 trillion naira in first quarter of 2023, higher than the value recorded in the corresponding period of 2022. Now, the multi-billion-dollar investment interest indicated by Indian investors in Nigeria has continued to elicit commendations by stakeholders in various sectors who believe Nigerian economy is heading toward greater heights. State House correspondent Musbaud and Wahab reports from New Delhi.
Don't procrastinate. Don't be frightened about investments in Nigeria. Bring it on.
The chief marketing officer of his country kicked off the process, and his canvassers soon went on the drive.
This government, the president, but also the Minister of Finance, is extremely committed to ensuring that we digitalize government services in Nigeria.
We have opportunity with infrastructural deficit of about 3 trillion to bridge between now and the next 50 years. And that creates a huge opportunity for investors like yourselves to come in to tap into that opportunity.
Not only ready for business, the Nigerian government also shows its preparedness to create the enabling environments for the existing and upcoming businesses to thrive. And convinced by the sincerity of purpose demonstrated in the policy decisions of the current administration, the existing investors are ready to double up, and new ones are grabbing the opportunity.
There is Jindal Power and Steel, which committed $3 billion business. There's also Skipper, which deals with the power, it's a power company, Indorama, as well as Ashok Leland. So this indicates that the Indians are now ready to do business with Nigeria because of the confidence they have in the new government.
Nigeria, we are lucky to have him at this critical time because he understood business, at the same time understood governance. That's why investment is coming all over.
On the other side, Nigerian investors attracted partners in their drives with special interest in oil and gas, solar energy, information technology, agriculture, and infrastructure developments.
Our company in Nigeria currently has over 140,000 customers with this Indian partner to connect people rurally, and then we rely on technology to collect revenues from the rural areas via mobile money.
They have achieved a lot in democratizing access to digital services. So we want to learn from them how have they achieved this, and also how can we transfer and build similar digital public infrastructure as well as digital capacity.
Mr. President believed rightly so. He wrote about it, he speaks about it, that Nigeria can and indeed will find hundreds of billions of dollars from the international investing and domestic investors so that we build the economy.
Doubling the existing trade volume of about $15 billion in Nigeria, key players project that the strategic partnership between Nigeria and India will continue to grow in a win-win situation.
Now, the place of Nigeria and India in international economic, political, and diplomatic Afro-Asia region cannot be put aside. Now, how best can the two nations leverage on these potentials to create a reliable economy and socio-political benefits in their respective region? Joining us via Zoom from United States of America is investment and promotion expert Ogbona Okuku. Welcome to Business Express.
Yeah, thank you for having me.
Okay, before we actually talk more about the investment, I would like us to break the whole thing down. We have $14 billion of investment, significant investment pledge, which is music to the ears. Out of it, we have $8 billion in fertilizer and petrochemicals. Those areas that this investment, will be channeled to. $3 billion in iron ore and steel development. We have $1.6 billion in power and $1 billion in defense. 700 million in various sectors. Should we be hopeful that this will come to fruition?
Yes, of course. Whether we like it or not, I always say this. What testimonies are to the religious organization in believing that God is good and has the ability to do is the same. That's exactly what agglomeration does when it comes to investment. Agglomeration in the sense that people have succeeded in this economy, especially the Indians. In 2005, I always use as an example. I led the Indorama Group to bid for LMA Petrochemicals in 2005. By 2015, this company, as at that time, in 2005, they were worth less than $200 million. But by 2015, it was like 10 years after, Forbes recorded that this company was now worth $15 billion. So for me, that's a testament. That's a testimony that would drive any investor in India because they are of Indian origin. For them, they have expanded. That means they've expanded from the time they took over LMA Petrochemicals till date. They have been expanding. So the $8 billion pledge is also significant because they know they've not been able to saturate that same sector. Petrochemical, the need for fertilizer is still high, the demand for fertilizer is still high, even in the West African region. So they've even started exporting fertilizer from Nigeria to other parts of the world. So the gas infrastructure that they need is still there, all within the hemisphere where they do business. So that expansion, I know, would definitely occur. Now, for the iron ore from Jindal, must occur because it is a sector where is an untapped sector in Nigeria. The iron ore, the when it comes to iron and steel industry is an untapped sector in Nigeria. And Jindal, they are used to doing business in Nigeria, so they understand how to navigate. And number three, the fact that Jindal is a company that have worked in Lagos State during when the present president was the governor, so he understands business. So it makes it easier, gives of that country want to do business in Nigeria. So whether these transactions will translate to real transactions, of course they will, because we're speaking about people who understand, who are already doing business in the country. So it makes it easy and it's going to flow. All they've always waited for, all investors are always interested in, do we have that support from from the host country? Do they want us in the country? Yes, the president have shown, yes, we need you in the country. We'll support you. We'll give you, I mean, that's the highest level of advocacy when it comes to investment promotion. So I believe it's something that will work, and then it will work really good.
Okay, let's talk about the possibilities now. Beyond commitment, what does it take to translate these commitment to reality? This is as previous commitment hardly pulled through in their entirety.
That's what I was trying to explain why this one will be a lot easier. Like I said, Indorama, they're already in Nigeria. Jindal has done business in Nigeria before. So it becomes easier because they understand, they can navigate. Let me put it this way. Every investor is either resource seeking. That's when I'm talking about resources, either natural resources or mineral resources. Now, they are market seeking. Now, do we have a large market? Yes, we do. West Africa, even it moves away from Nigeria to other countries, because I mean there's a window where you can actually take your goods and services out of Nigeria. Number three, they are also strategic asset seeking. Just like Indorama bought over that strategic asset in the petrochemical industry, and they've expanded to different areas. Now, if there's the first one, which is actually where the problem is, the efficiency in your system. Now, the efficiency in your system speaks to the ability for them to navigate within your system. Now, speaks to things like how easy is it for you to get life you want to do, power generation in Nigeria, how is it going to be easy for you to navigate within the system in Nigeria, the bureaucracy, the red tapes within the country. So those are the things, your tax regime, how transparent is your tax regime, how easy is it for you to get redress from the court of law, the industrial, when you have the industrial disputes. So these are the things.
Then there's
so
the issue of ease of doing business as well. Do we have
the ease of doing business. Generally, those are the things, it all comes down to the ease of doing business. Now, the CEO of the nation tells you to your face, any problem you have, come to me. And in front of you, he charges his minister, the same minister, A, B, C, D. I want these things to come to realization. And please give me heads up if there is any issue. So that also means that most of these investors will have access, some level of access to the president. So if you are trying to create bottlenecks for them, they can actually communicate directly, and then your job is at risk. So really, for the first time, I always say this: if the chief marketing officer of the nation is not leading the way, it becomes a bit difficult, because the same investors, US is looking for them, China is looking for them, Netherlands, even the easiest place to do business, Singapore, they are looking for these investors. So you need to, put your best foot forward.
Okay, now another issue here is the issue of technical skills. Does Nigeria have the requisite technical skills to take advantage of a huge opportunity like this?
Now, you see, when it comes to industrialization, like if I have an opportunity to speak about industrialization, I say one of the first things is you have to have, your knowledge base has to be robust. Now, for certain industries, yes, we do, but certain industry we don't. I give a very simple example. It comes to let's say the manufacture. If we're trying to manufacture candy, which is the major raw material you need for candy is glucose syrup. Now, glucose syrup comes from cassava. Now, in the entire nation, Nigeria, there is no factory where they make glucose syrup. Now, for you to produce candy, that means you have to, or you want to do backward integration. When it comes to production of glucose syrup, you will need people that have expertise. But at first, we will have to, import expertise, and then you begin to train people. So these things things that happen, because foreign direct investment comes with it, transfer of technology, so transfer of knowledge. So on the immediate, it will be difficult for you to find those with the right expertise. But after a while, you begin to train people and make them understand, just like the Dangote refinery. If you look at the statistics of how many people that were brought from offshore to put in to make sure those refineries start to work. I mean, the refineries start to work, and then the people that he has trained locally. So it goes to show that the next person that want to build refinery in Nigeria will only poach from there. They don't need to bring people from abroad.
Talking about Dangote, there was this issue that came up about, I think, about 11,000 people that were employed from outside the country. Issue of technical skills. If it were Nigerians, I think it will have been, will have been benefiting more from this.
No, this is what I'm saying. Because, I mean, for example, it's a very good illustration. Because where would he find the people with the expertise? Our refineries stopped working long ago. And the kind of refineries we have in Nigeria, in Warri, in Port Harcourt, those technology are already obsolete. So if you want to do new, you have to bring new people with the right expertise. But now begin to transfer the technology. So if you notice, if you do an audit in that refinery today, because it's even more expensive for him to be bringing people from abroad to come and do the work. So part of the contract he signed with the companies, the technical partners, please, you must transfer technology to the young engineers in Nigeria. So let's say people that read petrochemical engineering, mechanical engineering. So most of them now today, most of that 11,000 expertise would have reduced to like 2,000 because you have transferred technology. That's why I said. So it will happen like that in other sectors. Let's say you want to produce ethanol, you want to do the iron ore, that will occur because you can't readily find people with the expertise in that country. So like I said, you must add that to your cost of project on the initial. But after a while, you begin to phase them out using the training model to transfer the technology, and then after those other people that came with the transaction will phase out over time.
Okay, generally, how ready are we for investment?
How ready are we? Speaking from a Nigerian point of view, we are by force. We are ready by force. When I say we are ready by force, see, if there's no way on earth we're going to come out of the economic quagmire that we're in if we don't have a lot of effects in our economy. We can only print naira. We can't print dollar. We only can earn dollars. And the only way to earn dollars is to create atmospheres, create portfolios that will make foreign direct investments to move towards you. So which is what the president and his team understand, and they are beginning to move to make sure, let's move to these people, show them what we have. I mean, give them the confidence, because everything about investment is a lot about perception. So if you prepare the best fried rice and put it inside a dog plate, it becomes dog food, whether you like it or not. But if you prepare fried rice and dish it well and tell the people that this is the best meal in this world, they will see it as so. Because, I mean, like I said, everything is about perception. So the fact that the president himself is leading the team shows that we are interested in it. And are we ready? Of course, we are ready. So these things will start, and then you now begin to distill what are the issues in different sectors, who are the people, then who are the people that will follow up, put the right people in right positions, make sure they have the right expertise, to make things work. Because we don't have any time to waste. Investors don't have time to waste. I always say this, because as an investor, we need something Hofstede said when it comes to investment promotion. There has to be a cross-cultural dimension to it, to investment promotion, which means you need to be able to understand a man who has $1 billion in his account. The way he reasons is different from you that is receiving 200,000 naira as a director in ministry as your salary. So you need to understand his mindset and psyche to be able to deal with him. So you need to bring yourself up to a point where you understand that this man does not have time to waste. One of the companies, for example, said, Mr. President, do you know that we have had our document in the FCT ministry for over 1 year? Of course, which investor will have that kind of time? So if he had $100 billion waiting to do business in the FCT, and his file is in the ministry for over 1 year, do you know what that means? So
okay, Mr. Kuku, what do we need for hand-holding when they come in?
Now, first, what you need is that you need to have an efficient investment promotion agency. Okay. efficient, I use the word efficient investment promotion agency, who will deal directly with these investors and help them navigate within the system. Now, you see, where they need licenses, you must be there to help them organize, arrange. So you don't behave like a regulator. You behave like someone who's there to support them. You must be able to do the advocacy that they need. And then you have direct ask the president in case anybody wants to give you issues. We have too many regulators who do not understand that investors don't have time. We're not saying that people should break ranks. No, that's not what we're saying. But we just need to understand that you can't make laws that will inhibit the growth of your nation. I'll give you a very simple example, sir. We need power in Nigeria. But do you know, for you to get licensed to do power in Nigeria, you must interface with at least 8 different government agencies by law. So how on earth would that work? So the only thing I would suggest, let me give you an example. You must do your EIA, which is Ministry of Environment. You must get your license from NERC. You must get your evacuation corridor from TCN. You must get the land where you're going to do the transaction within the state. So you must go to a state governor to get your C of O, get the land. You must deal with NGC.
I'm afraid, Mr. Okuku, is a whole lot of conversation. And we'll continue the conversation. Thank you very much for coming on the program, Bona Okuku.
All right, thanks for having me.
Now, how much is the Naira exchanging for other currencies? Let's find out. Now to the capital market. Nigeria's equities market closed the last trading day for the week in a positive territory with an all-share index of 68,143.34 basis point at the end of the day's trading session on the floor of the exchange. A total of volume of 483.4 million shares in 6,660 deals valued at 8.34 billion naira were traded. Market capitalization wrapped up the week at 37.2 trillion naira. Now, Asian markets fall as Japan economy grows slower than expected. Hong Kong cancels Friday trading. Over to you, Bossede Abel. Let's have an update of the markets around the world.
All right, thank you very much, Musa. Hello and welcome to the Global Market Review. Global market sentiment slipped in recent days as investors access weak Chinese data, higher government bond yields, and the challenging interest rate environment with renewed inflation concerns in the US. For Friday's trading, European markets were lower, on track for a streak of 8 consecutive sessions of losses. DAX, FTSE, and CAC 40 all depreciated. Asian markets were lower as Japan released revised second quarter gross domestic product figures. Hong Kong cancelled trade for the whole day due to a storm warning. Japan's Nikkei 225 extended losses from Thursday and fell 1.16% at 32,606.84 basis points. The Shanghai Composite also dipped 0.18% at 3,116.72, while the Hang Seng Index was unchanged. Stock futures in the U.S. were lower in early trading Friday amid concerns that the Federal Reserve could raise rates more than expected. The Dow Jones Industrial Average Futures dipped 31 points. S&P 500 also 0.11%, and the Nasdaq Composite followed suit at 0.14%. Now, most African stocks closed mostly negative in line with their global counterparts, except Ghana's GSA Composite that rose marginally positive. So that ends the week's trading on the global scene. Back to you, Musa.
Thank you, Bosside. Well, that's it. Business Express returns next week, Monday at 3 p.m. Thanks for watching.